G'day. Stefan Angelini from Angel Advisory. Thanks for tuning in to another economic update. It's 27th of March, 2023. Grand Prix starts on Thursday here in Melbourne. Oof, what a good time it's going to be. If you're there on Friday, I'll be there. I'll see you there. I'm excited. What are we going through today? We are looking at interest rate predictions from some of the big banks, what they think is going to happen in Australia. We're looking at what's happening in money markets. So there's been an influx of $286 billion in the last 2 weeks into money markets. I'll explain what money markets are and who's receiving all these funds and why they're receiving them. Basically, if you've got more than 250 grand in savings in a bank, it's these people that are transferring it out of those savings in a banks because, well, they're not insured, they're not protected, therefore it could be risky. We're going to look at Warren Buffett's wage and why he's only been taking a wage of 100 grand a year for the last 4 decades or 40 years. And also we're going to look at some troubles that Block have run into as well. Block is a company that bought Afterpay if you don't know. So just letting you know, this is just general information. If you want any personal advice about your personal situation, please go consult your licensed financial advisor. And if you want to listen to the full episode, go on over to the Real Wealth podcast with Stefan Angelini. You can find it on Spotify, YouTube, or the podcast players. Happy days. Let's keep going. So what are Australian banks predicting will happen? ANZ, CBA, NAB, and Westpac all believe there's at least another 0.25% built into the market. You'd think because of the recent turmoil in the financial system that reserve banks would stop. But just last week, we saw the US Fed raise rates, we saw the Bank of England raise rates, and we saw the Swiss National Bank raise rates. So basically, they are saying that the battle with inflation is more important than easing the squeeze in their respective economies. And it's probably going to keep going here in Australia. So ANZ and NAB are predicting another 0.25% raise next month in April, bringing the peak. And then CBA is, in April and May by ANZ and NAB. CBA is predicting another rate in April and then stopping. And then Westpac have said that won't raise in April, but they should raise in May. So that will lift the RBA cash rate to between 3.85 and 4.1%. So we'll see what happens. Just to let you know what's been happening with the amount this is affecting people's hip pocket. The average $500,000 loan prior to these rate increases, the repayments monthly were $983. These would now be $3,318 according to Rate City. So quite a vast increase and obviously affecting people's hip pockets and how much they can spend and save. Now, money markets have taken in $286 billion of people's deposits from banks. So basically, what is a money market? Money market funds typically hold very low risk assets that are easy to buy and sell, including short-dated US government debt. The yields are now quite good, the best they've been in about 15 years. And therefore, it's attracting people back to here. So coming off the Silicon Valley Bank issues, people with more than 250 grand in the bank don't have their money protected. And therefore, it's forcing people to think, well, is it worth the risk of keeping my money in a bank if I've got more than $250,000? And basically, what's more secure than a government bond or government debt? Because they will pay you back. They pay you a coupon and at maturity, you get your money back. So people are now saying, I'd probably rather my money invested in one of these bonds rather than within a bank. So if you've got more than 250 grand in a bank, make sure you get some advice on that and ensure you're doing all the right things according to your risk profile. Who are these money makers and who are these big funds accepting all this money? Companies like Goldman Sachs have taken in $52 billion. JP Morgan have taken in $46 billion and Fidelity have taken in $37 billion. And as you can imagine, these big banks, they take a clip on all the money they receive and therefore their returns or their profits are going to increase over the next little while because there's increase in funds. Talk about Warren Buffett. What a man. He has kept his wage at about $100,000 per year for the last 40 years. And he's actually given 50 grand back just to cover some of his own personal expenses. But don't forget, he's worth over $100 billion thanks to his shares in his company, Berkshire Hathaway. And that just goes to show business owners don't need to take a really high wage to grow their wealth. Their wealth can grow in their business. They could take things like dividends, distributions in order to increase the amount of pay they get out of the business, but really the equity grows in the company that they own. So a good little kick up the bum for you business owners. Remember, just grow your business. Don't have to always pay yourself a massive wage because Warren didn't. Let's look at what's happening with Block. So some investment managers, Plato Investment Management, they take care of a lot of money, specifically in pension phase money, and they use what's called a red flag system. So they've got about 100 red flags they apply to different businesses. And anytime there is over six red flags for a business, then they will likely decline by at least 10 to 15% in the next 12 months. So the red flag system works. And let's see what red flags they had on Block. So number one, they said the red flag number one is the CEO was also the chairman of the board, so had a lot of control. Red flag two, there were related party transactions between related companies. Red flag number three, there were a large growth in debtor days, so people weren't paying as quickly. Red flag 4, there was increased capitalization of intangibles. Red flag 5, very high earnings manipulation score. So they were manipulating their earnings, basically. Red flag 6, there's a large divergence between the GAAP and non-GAAP earnings. So GAAP means generally accepted accounting principles. And therefore, you just got to start wondering, well, is the accounting being done correctly? Red flag 7, very high share issuance, so issuing a lot of shares. And then red flag number 8 was insider share sales, but no insiders buying over the last 2 years. So people that own a large portion of the company were getting out, but people that own it weren't buying back in. And that just raised a lot of red flags for anyone. So before you do your investment or you make an investment into a large company, make sure you do your analysis. That's why we sometimes like to use funds, because while a company like Block might appear in a lot of ETFs and funds, use your fund managers to actually assess the companies and the internal management to determine whether or not they're a good investment or not. So that's it for today. Thanks a lot for listening. We'll see you soon. Happy listening, and go Ferrari. Cheers.